look, like it or not, but the current crop of leaders in the world trust gold. They don't trust Bitcoin. And that's really the best way of describing it. So when you look at what the BRICS are thinking about doing, and they're moving to a digital asset payment, the digital payment system, which just got kind of pre-announced today. And oh, by the way, like my friend Vince Lanci is out there like all over the story, and he like posts a picture of the BRICS Pay interface, and it's like all these currencies that you can pay in, and one of them is XAU, which is the ticker symbol for gold. Huh. The deuce you say. Okay. So the central banks are buying gold because they know that they're going to, in order for them to be able to secure physical collateral in the future, undergird their debt or anything else that, they're trying to do, they are going to need gold. It's very clear that the BRICS are making it clear that they value that as the ultimate collateral for international trade, or at least, intercountry trade. And that has really never changed. No matter how much globalist shitbags like Bernanke want to tell us that gold is an anachronism and is tradition, he knew exactly what he was doing when he was talking to Ron Paul 17 years ago. Like, he knew what he was doing, and he doesn't give a shit. But, he's an academic, and he's a globalist, and that's who Ben Bernanke is and was and will always be. That's not going to change. Gold, the central bank purchases somewhere between 15 and 20% of annual gold production, the gold demand at this point. The Russians mine, a couple hundred tons of gold a year. None of it leaves Russia. Chinese mine another 100 tons on top of that. That doesn't leave the country. And you're starting to see soft capital controls go up around gold in the G7, either in the form of you're not allowed to take it across your borders. You're not allowed to, you can't take a 100-ounce gold bar with you onto the airplane. That will get confiscated that will not happen. So that's a capital control, and everybody knows it. Okay. So, why do you want to leave the country with a 100-ounce gold bar, friend citizen? What's wrong with America? That's literally what we're dealing with here, right? So that's a good sign, because that's the governments having to respond to what's happening in the marketplace, where everybody is losing trust in the institutions themselves, the governmental institutions and the existing institutions. They're saying, look, I want reality. I don't want claims against reality. I don't want something that nominally pays a yield but doesn't really, because they inflate the purchasing power of it faster than they measure the CPI inflation. Like, it's nonsense. Like, bond yields are dumb. Like, they should be like, I complained earlier. I'm like, I was on that podcast with the Kerrigan's podcast, and I looked at everybody. I said, like, it's a fiction that anybody thinks that German bonds should be trading 180 basis points less than American debt. That's just dumb. And I don't believe that American debt should be trading, the 10 years should be trading at 4% when it should be trading at 9%. But it's trading at 4% because the markets are fake. So those markets are fake. But then, of course, we're doing this on Friday, the 16th, 17th, whatever the hell today is. And gold's going to close this week above 2,700, both in the cash and the futures market. Silver's going to close above 33, unless they, bomb at 75 cents in the last 5 minutes trading and paint the tape, which I expect them to do. Then, that doesn't matter. That's just where we're going. And that's a reflection of the bid underneath the gold market is a reflection of the central banks. And it's a reflection of the fact that gold is now being fought over, and it's being fought over at a high level. And again, I hate to bust the nut of the Bitcoin maxis, but I love Bitcoin. But Bitcoin is being used to collateralize the SOFR repo markets in the United States. That's its primary goal at this point. And Bitcoin is never going to become part of the financial system without it getting some form of stamp of approval from the monetary powers that be. I'm sorry, it's just not. You're not building a separate system. What you're building is an insurgency within the existing system, which will eventually, if all goes well, and Bitcoin, and the Bitcoin detractors who believe that, that the NSA has backdoors in the SHA-256 are wrong, then Bitcoin will eventually take over that system, or not. We'll see what happens. Again, but we know that the fundamental underlying technology of Bitcoin is something that can be replicated. And now we're just doing the use case scenario. Even if Bitcoin doesn't wind up being the thing, it probably will be, because it's got first mover advantage and all these other things that are going on with it. But even if you just say, even if it doesn't, if you leave that room for skepticism, right, which you should do always, then, we know how to make another Bitcoin. And I said this in 2010. So if the empire strikes back against Bitcoin, we'll just make version 2.0 and we'll move on with our lives. Why? Because that's what humans do. If they want something and they need something, they will create the thing that they will need to in order to express their want and desire. At the end of the day, all governments can do is make black markets. Like, steal our wealth and make black markets. And then they shoot us for trying to make black markets. That's like government in a nutshell. Fine. We'll make more black markets, because I think black markets are undefeated. I mean, in human history, black markets are undefeated. And I think that's kind of what we've all been talking about.
So what do you see the relationship with gold and Bitcoin? I mean, obviously they're competing. I mean, all assets to a sense are competing with each other, right? So I mean, they compete with each other. However, at the same time, they're doing the same things. I mean, what do you see going forward here in the next year for both the asset classes?
Oh, they're both going much, much higher. Like today is a perfect example of what's going to happen. I mean, this is where you get back and you start looking at you start doing technical analysis on markets. And that's why I do what I do. The way I do it is in order to try and take snapshots on a regular basis to say, okay, here's my thesis. Here's how it's playing out in real time. Here's what I'm seeing. And then when you see the confirmatory moments, like you saw today, Bitcoin's going to close to, Bitcoin in my world, because you have to pick an arbitrary day for Bitcoin every week to close the market. So I use investing.com because it's free, and I refuse to pay Mike Bloomberg $25,000 a year for a terminal. But here's Bitcoin today. Tomorrow, it's trading at nearly 69,000, which is a very important technical level in that it's not closed on a weekly basis above 68 grand in quite a long time. So now we're going to get if we go to tomorrow night at midnight when investing comes, that's the way I look at it. And that week's ends on Saturdays at midnight Eastern time. So if we get that close at that level, even if it's not above the all-time high in the 73 grand range, as long as we get that high in the above 68, that's going to start setting the shorts' hair on fire, and they're going to start thinking, maybe I shouldn't short here. And then they're going to start backing off, and then the bulls will press their advantage, and we'll see, and we'll watch the natural run of the guys who are managing the money in the algorithms. Gold closing today in the spot market at 27.20 is what I'm looking at now. That's insane. That's a breakout. Silver above 33.60. So silver's accelerating into the close today. I was fully expecting it to get whacked 80 cents, and it just went up 80 cents. Silver's on its way to 40. Gold is on its way to $3 grand. In the next year, I'm going to tell you now is I can see these markets getting out of control, but I don't want them to. What I want is a game in gold so boring that it's going to win. I want $200 up and $100 down. $200 up and $100 down. $300 up and $150 down. I do not want to see, as Jim Sinclair used to put it, a rhino horn on the way up and then a fishhook on the way down. I want to see a nice, steady, grinding, slow, unnerving, we're taking this thing where we want to go bull market.
What is your advice to someone in there, young family, maybe older family, male? How are you protecting your portfolio? What are you looking at here, maybe the next year or the next 10 years that you're kind of just eyeing and keying in on?
If you want the answer to that question right there and you like that spicy clip, check it out here. Come on, we'll see you in there. But if you want the full interview in its entirety, all the spicy clips put together, and you're not going to want to miss it, believe me, then check that out here. Come on, we'll see you in there. Do it.